What is up, everybody? Today is Wednesday, June 18th, and today I took one trade, and let's go over the trade I took itself. So, overall, I did come in with a bullish bias. The main reason for the bullish bias, if you notice, we have a very small 4-hour fair value gap right here that we were starting to trade out of, and it looked like we were trying to put in, the higher low that we would have right here to continue this bullish structure higher. Now, obviously, we see now that that's not the case. We have now moved on down starting at 6 p.m. tonight. Now, this is the next day. But anyway, on the 4-hour chart, I was bullish just because of that. On the hourly chart, the biggest thing that I saw was the fact that we had this 1-hour fair value gap where we tapped into 2 times, and then right at the open we tapped into it once more and pushed on out of it, which started to make me more bullish. And then on the 15-minute time frame, the biggest thing that I saw here was the fact that we were holding this 15-minute fair value gap. We did come down, sweep out these lows, and if you also look here in this red line is the daily opening level. So we opened up, created the lower wick, and then started to trade above it, failing to come right back down to it, or really close below it again. So we did tap it and bounce off of that. So that made me very bullish coming into the very first macro itself. So now if we take a look at what happened in that first macro, we see here that we started to come down, we pushed out, we got that retracement here, and then immediately when this 1 minute bearish fair value gap got inversed, that's when I entered in. My fill was around this level right here at 2208.50, and so I was targeting the level that I had right here, which was this swing high, and that right there was a 1 to 2 risk to reward, which very quickly, came out and boom, TP smashed. So now coming into the New York AM3 session, these are the trades that you could have taken. Now, in this right here, I would not have taken this long, although I did draw it out for you guys. I would not have taken it due to the fact that we did push up very aggressively, and there was really no kind of pullback that was sufficient enough to think that that was good to then now take going higher. Into the New York lunch session macro, at this point, I would have been looking for some kind of a short setup, due to the fact that we did inverse this 15-minute fair value gap right here, and we had yet to come back down. We did push on up and then started to push very aggressively back down. If you did take a long here, you can see that your position would have gotten stopped out. And just seeing this chop price action here, I would not have wanted to be in something like that. But like I said, because we pushed on higher, from this inversion fair value gap that got created, I would have taken a short setup, which would have been the 1 minute bearish inversion fair value gap right there. And as you can see, we did come back up into it and tap it and then start to move on out. So the trade would have been this right here. And then my target would have been trying to aim for this low right here, which we did get in the New York PM session right there. So seeing as to how, we did get a very nice 1 to 2.6 risk to reward. Now, we did have FOMC in the afternoon. Would I have taken this long here, even though I did draw it out? I mean, I was watching it and I thought, that would probably be a good long potentially, because we did come back into that 15-minute fair value gap one more time here. And we did hold it, right? We started to push down and then start pushing aggressively back up, back into that 1 hour fair value gap. Overall, I was bullish still on the day. This trade right here would have been a retracement. So yeah, you could have taken that. It would have been very risky due to the fact that FOMC was coming up. But as you can see here, this hit a very quick 1 to 2 risk to reward. Here is that 1 minute bearish fair value gap that got inversed. There you go, that's your entry. And then, your take profit would have been low hanging fruit, either one of these 2 swing highs right there. Like I said, I always like to target a 1 to 2 typically. And now at this point here, you see that we did come right back down, and I believe we invalidated that 1 hour fair value gap. Let's double check. We invalidated it right after 3 o'clock. So then at this point now we have bearish order flow on the hourly chart. We failed to push to create a higher high, and now we invalidated the only thing that was acting as support for us, and we did have a 1 hour close below the daily opening level. So coming into that very last macro on the day, I would have been looking for a short setup, and as you can see, we did get that right here. We've got this 1 minute bullish fair value gap that got invalidated. If you wanted to be very risky right off the bat right there, the very first one, could have taken that. But either one of these two, if you took this one, stop above the swing high, and then you target low hanging fruit, which would have been this right here, a 1 to 1.7 risk to reward. If you actually took the invalidation of that one right there, would have been a 1 to 4 risk to reward. So overall, some really good moves. I think the price action today was actually very clean, given the fact that we were going to have FOMC in the afternoon. It was very range bound, but overall, according to the draw and liquidity that you had and the order flow that you had on the higher time frame, you could have found setups that were aligning overall with what you were looking for. So hopefully you guys ended up green today. Tomorrow is a holiday, so I will not be trading that, even though the futures market is open. But we'll see if there is any setups. I may just take it on an eval, not on my funded accounts. But yeah, all right guys, take care. Peace.